Ladies and gentlemen, good afternoon. This is the Chorus Call conference operator. Welcome and thank you for joining Acea's conference call on the results as at the 31st of December 2017. As a reminder, all participants are in listen-only mode. After the presentation, there will be an opportunity to ask questions to the managers of the group. Should anyone need assistance during the conference call, they may signal an operator by pressing star on their and 0 on their telephone. At this time, I would like to turn the conference over to Ms. Ira Andresani, Investor Relations Manager of Acea. Please, ma'am. Now, good afternoon, ladies and gentlemen, and thank you very much for connecting to the conference call for the presentation of the 2017 results of Acea. Mr. Donnarumma, together with Mr. Gola, CEO and CFO respectively, will present the results of 2017. At the end of the presentation, you will have the possibility to ask questions. I will hand you over now to the CEO of the group, Mr. Donnarumma. Ladies and gentlemen, good afternoon. I would like to start the presentation by making a very brief introduction, and then I will give the floor to the CFO who will disclose the data for 2017, and then you will have sufficient time to ask questions. Let me tell you that 2017, as you know, was a year of discontinuity as far as the management team is concerned. Well, as far as we are concerned, we are closing the data with very positive results. As I said, the year was very complex, also from an operating point of view. Let me remind you the water crisis in the summer that required major operating, financial, economic efforts on the part of the company. 2017 was also a year during which we had to change the organization of the company. We also put in place IT systems that in 2016 were integrated, and we also had to start a number of business operations like invoicing, credit collections at the beginning of the year, which, as you know, had an effect on the net financial position and on the working capital. We then prepared and drafted a business plan, which we submitted at the end of the year, which saw us committed in implementing a program that can create value for the company going forward. So we're closing 2017, we're closing the year with results which are in line with the guidance. Sometimes they are better than the guidance we gave to the market. Let's take the EBITDA. The adjusted EBITDA amounts to 840 million euros, plus 7% versus the previous year, ahead of the guidance and business plan forecast. As far as CapEx, in line with the guidance, 530 million euros more or less, and as far as the net debt is concerned, as you can see on page 2 under executive summary, you can see the net debt amounting to 2,421 million euros, which is in line with our guidance and ahead of the business plan. If you look at the adjusted net debt, as the CFO will explain later on, the net debt amounts to 2,325, which is certainly better or in the upper part of the range of our guidance, which was 2.4 billion. Now, let us now move on to 2018 guidance. EBITDA is bound to grow between 3 and 5% versus 2017. Here, I'd like to underline something which is important. 2018, of course, starts with the results of 2017. We thought we were going to close our year 2017 with 832 million euros. So, on the contrary, had we closed the EBITDA with 832 million euros, that is plus 6% the business plan, well, it would have been consistent. So, CapEx are going to grow gradually. During the presentation of the business plan, I told you that 2018 was going to be a year with a gradual increase of investments, which are to be in line with our need to kind of start our machinery, which means authorizations, bidding for public tenders. So you need to, make sure that the overall operating machines works. Now, as far as the net debt is concerned, here we give you a range for 2018, 2.6, 2.7 billion euros, which is in line with CapEx. Now, let me go back to a number of items which we disclosed during the business plan presentation. The business plan was presented to the market on the 28th of November 2017. It spans 5 years from 2018 to 2022, and it has a major discontinuity, especially when it comes to greater investments in regulated infrastructures. And here I'm referring not only to the money that we are going to invest, but the type of investments, the type of infrastructures aiming at allowing us to provide better quality services and to comply with the quality standards required by the government. The idea is that, however, that of improving our operating results, that is improving the EBITDA and the net profit and all of the economic and financial parameters, plus creating value for our company. Investments envisaged amount to more or less 3 billion euros. The average annual EBITDA is going to grow by 6% during the business plan period. Moreover, we are going to make investments following our CapEx discipline, allowing us to save some 300 million euros. So the real investments are going to be much more valuable than the amount of money that we are going to invest. And as far as dividends are concerned, well, we adopted a payout policy for the business plan period, which is going to follow the trend followed by the company over the past few years. You know that 2016 was a year of discontinuity with very good results, with favorable items like the regulatory lag, which gave us the possibility to improve our EBITDA of around 111 million euros. Now, on the page 2, you can see the net debt EBITDA ratio. We believe it will go down towards 2.8 times, thus allowing our company to be able to invest without having a major financial burden. Now, this being said, let us now move on to page 3, where you can find a number of relevant events which characterized the first part of 2018. For instance, the agreement with Open Fiber. Perhaps, if you're interested, we can give you some details about this, and the issue of the bond that was favorably received by the market, and in this case we managed to issue a bond with a decrease in the cost of money, and that the amount of money will be used to cover our capex needs. Page 4, you can see the low-risk profile title of this slide. Why? Because we are underlining the fact that we are a company operating in regulated businesses. The EBITDA of 2017, 75% of which was due to regulated businesses, the remaining 25 from non-regulated businesses. We believe that the regulated part could grow during the business plan period. And then you have the data about water, energy infrastructure, commercial and trading, environment, and overseas. You have the EBITDA details here. Let me underline, let me draw your attention about the absolute balance between water and energy infrastructure businesses. This is something which I had already underlined in other occasions. Well, it is fair to consider Acea as one of the most important players in the water business. We are the leading company in this industry in Italy, but we cannot disregard the contribution given by the energy infrastructure business. Within the new organization that we adopted in 2017, the energy infrastructure business includes distribution and production of power, of energy. Let us now move on to page 5 of the presentation. Here you have the main financial highlights. As you can see from the figures, consolidated revenues amounting to 2.797 billion. They are slightly going down, minus 1.2% versus the previous year. But if you look at the adjusted data, revenues are growing by 2.8%. EBITDA at 140 million euros, which appears to be down by 6.3% versus 2016. However, if you take the adjusted EBITDA, it would be up 7%. When it comes to the adjusted EBITDA, well, this difference is explained by 110 million euros represented by the regulatory lag. EBIT 359.9 million euros, a reduction by 31.6%. As you can see, the adjusted EBITDA only goes down by 2%. The group net profit, 180.7 million euros, minus 31% versus 2016. But if you take the net profit adjusted for 2017, well, it goes up by 1.9% versus 2016. Well, the CFO will give you some details here, but let me just underline something to explain these differences. Well, first of all, you understand when it comes to revenues and EBITDA, if we consider the exceptional one-off, that is that of the regulatory lag of last year, well, this company actually proves to be able to increase its value and to improve its results. Well, the EBIT and the net profit, well, in this case, the regulatory lag certainly rebalances the results. If this item had it not been posted to the results of 2016, well, we would have had no difference. And there are some other items which are worth underlining. The company, in a period of discontinuity, wanted to put its numbers in order and wanted to create a sound basis for the implementation of the very challenging business plan and maintain or keep the promises made to the market and to our shareholders. So I believe that the results, as you see them here on page 5, are self-explanatory. At this point, would hand you over to Mr. Gola, who will get into the details of the results, and then I'll come back to the Q&A session. Thank you.
Thank you, Stefano. Good afternoon, everyone. So let's go into more details on the analysis of our performance. So first of all, I would like to start with EBITDA. We are at page 6 in the presentation, which reports our EBITDA performance by business area, and in the following pages we'll find further details to explain these values, these numbers. So total EBITDA was 840 million, up 7% as against the adjusted performance of the previous year, which was 785 million. So the main driver for this growth was energy infrastructure plus 56 million, water plus 14 million, environment plus 7 million, and overseas plus 10 million, because of the effect of consolidation and the enlargement of the consolidation scope, which you see on the right-hand side, which gives us a positive effect of about 3 million by means of consolidating the Aguas de San Pedro company in Honduras. Commercial and trading decreased by 20 million. We see the details, and there is a one-off item in 2016 which amounted to about 10, so the recurring effect should be roughly 10, and I'll explain why later. Engineering and services and the holding company altogether worsened their performance by 12 million because of the bigger intra-group activity we had. Engineering and services actually provided more work, more services to the other companies in the group that the other companies capitalized. So the bigger cost supported by this company is not accounted for in this way. Another main component is an extra 30 million for IT costs, which is a one-off impact because of the Acea IT revamping project. As far as consolidation is concerned, there are other consolidation effects, 2.7 million of GWS, JL consolidated for an effect of 1.3 million, and Acqua Industriali 0.4 million. So altogether, we posted a slight increase of net debt to 2.1 billion. The average group force increased because of the extension of the scope of consolidation, and in particular the Aguas de San Pedro employees were most of the workforce recorded this year. Let's now go to an area-by-area division of performance. Water, well, 350 million was the performance, plus 4% as against 336 million in 2016. This growth was driven, well, 15 million Acea Ato 2, mainly through the increase in tariffs and to the increase of the quality bonus. We posted 31 million for the quality bonus, which is about 10 million more than the year before. Acea Ato 5 increased because of tariff increases by 2.7 million euros, and also we had an effect from the change in the scope of consolidation in the consolidation of net assets of some companies which were out of scope before. Actually, some companies were deconsolidated, and so that brought about a 2.4 million decrease in EBITDA. This is mainly due to Gori and to the Publiacqua company. And CAPEX is increasing substantially, so because of this year's increase and next year's increase, we're investing 271 million. We invested 271 million in 2016, plus 19.5%. Page 8 shows the performance of energy infrastructures. EBITDA for the year was 332 million as against 388 in 2016. Net of adjustment and the effect of the regulatory lag of 2016, the adjustment is 277 million, so net of the regulatory lag, we actually post a growth of 20.2%. So growth is due to this effect for distribution from 241 million to 287, plus 19%. Then EBITDA increased also through generation. Generation yielded an EBITDA of 41 million as against 32 in 2016. And also there was a slight increase in EBITDA from public lighting from 3 million in 2016 to 4.4 million in 2017. Investment, CAPEX, is decreasing slightly in energy infrastructures from 255 million in 2016 to 209 million in 2017, and the average workforce is stable. Couple of quantitative data and business-related data. The total electricity distributed is pretty stable. It's about 10 terawatts. The number of end users is stable too, 1,626,000, and total electricity produced was 426 gigawatts as against 405 last year. Page 9 shows commercial and trading. EBITDA stands at 78 million as against 98 the year before. As I said before, in 2016 we had a non-recurring item of about 110 million due to a contract which was closed for the marketing of smart meters. So this contract was finished and concluded in 2016, and it posted an extraordinary EBITDA of 10 million. Plus, there was a contraction of the amount of energy sold. The total was down from 8,316 gigawatts to 6,843 gigawatts, mainly in the unregulated market. This is also because of the strategy we started in 2016, by which we decided to adopt a more selective approach to the customer base, and in particular we decided to cut out some B2B customers that had a high amount of energy purchased. So a lot of revenues, but margins were very limited there. The amount of electricity customers on the unregulated market increased to 129,000, and the enhanced protection market customers decreased from 959,000 to 893,000. Total gas sold is pretty stable, and the number of gas customers we serve increased. Page 10 shows performance in environment and overseas. As for the environment, EBITDA increased from 57 million to 64 million, up 13%. This growth is mainly due to higher quantities of electricity sold, mainly through the San Vittore plant, which became completely operational during 2017. Then the Aprilia composting plant became fully operational too, and we changed the scope to include Acqua Industriali and Iseco within the consolidation scope. As to the treatment and disposal of waste, we increased from 822 tons in 2016 to 1,077 tons in 2017. The WT electricity produced increased to 354 gigawatts from 302 last year. As far as overseas is concerned, EBITDA shifted from 4 million to 14 million, mainly because of the total consolidation of Agua de San Pedro. Let's now shift to our EBITDA performance and go deeper under the EBITDA. Let's look at the individual items, as Stefano Donnarumma said. So EBIT is 406 million as against 525 million last year. Net of the regulatory accounting effect of 111.5 million, net of non-recurring items which we considered in 2017, the two amounts of EBIT is virtually the same. There's a 2% reduction. Non-recurrent items are quite diverse. Some items were already in our financials in the previous quarters, and in particular I'm actually referring to the restored ownership of a property house in a car park, and the write-down of a plant owned by Acea Ambiente, the increased provisions for bad debts versus ATAC, plus all the work we did to conclude our financial statements with a pretty prudent approach. We decided to reassess all of our assets in environment and in Acea Ambiente and Acea Produzione, and some assets that were in our financials at a value which we considered to be too high were written down for a grand total of about 12 million. Also, when evaluating the provisions for the depreciation for the year, we actually post an overall increase of depreciation from 254 million to 328 million. Only a part of that is non-recurrent. And this is also due to a pretty natural effect, so to speak, because in previous years, and at the beginning of 2017, we actually accounted significant IT investments with a useful life of about 5 years, which is certainly lower than the typical useful life of Acea core business, electricity and water. So IT investments implied a substantial increase in depreciation for this year. As to write-offs, considering the effect of Gala and ATAC, we shifted from 65 million to 90 million. So the provisions were also increased accordingly. And this is also due to the work we did in credit collection in the second half of the year, especially in the last quarter. We were able to reduce our P&L impact of the provisions for bad debts. As far as provisions are concerned, we now post 60.8 million as against 51.5 last year. Now, all of those items are also reflected in the net profit performance, page 12. So the reported net profit is 181 million. However, net of the adjustments made in 2016, we would post 214 million, which is up 2% as compared to last year. Overall, the tax rate is 33.3%, which is lower than the previous year's tax rate for several reasons, but mainly because of the decrease of the IREF rate from 27 to 24%. Overall, today the Board of Directors of Acea has approved the proposal of a payment of a dividend to the annual general meeting of the shareholders of 0.73 euros per share, up vis-à-vis last year, in line with the guidance we had provided in our presentation of the business plan in November. So the payout on net reported data would be 74% as against 50% in 2016. Now, of course, Acea is in a position to really pay a higher dividend, even though the net revenues are decreasing. The net profit is actually decreasing, mostly because of exogenous factors and because of the retained earnings from the previous year, due to the positive net profit generated in the previous year. Let me also point out that if we look at the value of total dividend on the adjusted dividends of 2016 and 17, the payout adjusted would be 74% in 2017 and 50% in 2016. The following page shows a view of this year's cash flow. So in 2017, Acea produced a free cash flow of 61 million, given from EBITDA 840 million minus the working capital absorption 247 and capex 532. It's quite important to notice that if we look at the performance during the individual 4 quarters of 2017, we may notice that the fourth quarter, Acea generated cash from working capital for about 100 million. So the absorption of working capital at Q3 was 345 million. So in Q4, Acea generated total cash, a positive cash flow by about 76 million, and it's reduced its net debt from 2,487 million to 2,421 million at the end of the year. So it's quite important to notice that this is what we told you about when we presented the third quarter performance and the business plan. We are seeing the first effects of this plan. And to give some color to that performance, let me tell you that this 100 million is the outcome of a number of activities we are engaged in at Acea today, both in terms of normalization of credit collection, which is proceeding smoothly, and the management of payables. We are actually working quite a lot on the migration of our suppliers' book to best factoring contracts. So we're actually trying to get rid of all problems of mismatches in payables and receivables that we had until last year. So we're going towards a stabilization of our working capital, which is in line with what we had presented when we presented the business plan. Should we look at cash flow in general? So free cash flow was 71 million. The total cash absorption was 292 million, but this should also consider the non-recurring components. And actually, the net debt of 421 million is net of non-recurring items, such as the effect of the split payment, the change in VAT payment system, which had a one-off negative effect by 70 million on paper, then the effect of the bankruptcy of the Gala company that absorbed cash for about 30 million, and the effect of the dealing with Acea, which had a negative impact too. So overall, non-recurring costs are about 100 million. Overall, we can say that the total adjusted cash flow is minus 196 million, and so the overall net debt is 2.4 billion. And so let's look at net debt at page 14. I already reported the fundamental parameters. 2.421 billion are composed by 2.7 billion with long-term, medium to long-term debt, with a positive component on the short-term debt of about 285 million, which means that cash at the end of the year was about 680 million. Now, that debt compared to EBITDA for 2017 is 2.9 times. This is actually improving as against the forecast we presented when presenting the business plan, which you may remember was 3 times. As far as the debt structure is concerned, 71% is fixed rate, and the average overall cost is 2.57%, and the average term to maturity is 5.3 years. I can actually tell you now that following the bond issue we completed at the end of January, the debt has reduced further. So at the end of the first quarter, the average cost will be 2.3%, and the average term to maturity is increased to 6 years at the end of the first quarter. Rating is stable. It's been confirmed. Also, when we issued our bonds, Fitch rated us with BBB+, and Moody's rated us with Baa2. So that's all from us. We'll be happy to take any questions.
This is the Chorus Call conference operator. We can now start the Q&A session. If you have a question to ask, you may press star followed by 1 on your telephone. To be removed from the question queue, press star followed by 2. We would like to ask you to use the handset when asking questions. If you have questions to ask, press star followed by 1 in this moment. I'd like to remind you that if you have a question to ask, you may press star followed by 1 at this time. If you have questions to ask, you may press star and 1 at this time. Ladies and gentlemen, there are no questions from the conference call at this moment. Well, there is a question by Enrico Bartoli with Main First. Well, good evening. I do apologize for asking the question late. I have a question about the working capital. Can you give us some more details about the meaningful reduction of the working capital that you recorded in Q4, and how do you expect to see it evolve in 2018 following the actions that you are implementing now? Second question about your guidance. Could you give us some more details about the drivers underlying the growth of EBITDA in 2018? Perhaps can you give us some indications about the regulated business? What do you expect from the water and energy infrastructure business? And then depreciation and amortizations. They went up quite meaningfully in 2017. Can you give us a data clean of one-offs and an indication of the evolution of the same item in 2018? Thank you. Well, thank you very much. We'll give you the answer. Now, as to the working capital, well, we talked about the actions that we put in place already. Well, we worked in trying to normalize the management of receivables, and this gave us its results in Q4, especially starting in September, and especially in the water business, where we had some delays in invoicing, and we are, or in billing, but we are working to normalize collections and to manage the receivables. And when it comes to the free market electricity, we are working a lot to screen customers, and also we are trying to be more selective in acquiring new customers. We also try to normalize our payables. So to try and answer your question about the outlook for 2018, well, we managed to decrease the working capital by some 100 million euros in the working capital in the end of the year in Q4. 50 of these are structural, so to speak, whereas 50 million is basically to be considered a cash advancement on 2018. So this will be neutral on the working capital in 2018. There will be an absorption of 50 million in 2018. Now, as to 2018, let me go back to what I said when I presented the business plan. Structurally speaking, Acea's business is associated to an absorption of working capital, which is around 100 million euros. Now, our cash flow representation starts from the EBITDA, and then you have the unpaid debt or receivables, which is not part of the EBITDA. Well, you have some a reduction of the 100 million to 75 million euros, which is the absorption of capital. EBITDA, and then you have some 35 million euros of working capital absorption on the regulatory business. For instance, the bonus in the water business, we calculated in the year, but then we cashed it in 2 years later. So a neutral management of working capital is associated to an absorption of around 100 million euros. This is what we expect in 2018. However, since we made a cash advance of 50 million euros in 2017, and the target of the net financial position that we gave you between 1.6 and 1.7 billions, well, the working capital is going to absorb around 150 million euros. So we, however, are working to respect our guidance, and therefore we should be able to have working capital generate cash in 2018, because we want to reduce the absorption to around 100 million euros. And we obtain this by working on receivables and on payables. What are the drivers for the EBITDA of 2018? Now, in this case, as Mr. Bortoli was asking, he was asking about the regulated businesses. Well, here you have the impact of the water and of the electricity tariff. Well, this is certainly due to the government or the authorities. And then when it comes to electricity, you also have to take into account investments made in 2017 and 2018, which are going to be recognized in the tariff. And then you also have a portion represented by operational efficiencies, which we're working on and which are already impacting our business favorably. So we believe that we can comply or be in line with the guidance that we presented. We also expect some growth in our environmental business or environment business. You also have some effects that you have to take into account at the end of the year, which certainly penalized us. For instance, temporary lack of authorization, closing down of some plants. But going forward, we should also be able to gradually improve these effects. As to your question about DNAs, well, year on year, DNAs grow by 250 million euros. DNAs have grown by 75 million euros, from 250 to 329 million euros. We have non-recurring items, 12 million to depreciate the plants in the environment and in generation businesses, 10 million euros related to the depreciation of the car park that we own, and then the remaining 50 million is due to an increase in DNAs, resulting in the change of the mix of assets. In 2017, some of the assets, some of the capex were posted in 2016, but the plants started operating in 2017, and as far as our IT investments are concerned, these have a useful life which is shorter, around 5 years, and lead to an increase in DNAs. Let's say that our structural DNAs are around 300 million euros. If I may, I'd like to have a follow-up question about your guidance. As to the commercial business, do you expect margins to grow, or do you believe that your results will be similar to those achieved in 2017? Well, we are going to work a lot to improve our margins, because this is also part of our industrial strategy, which aims at reducing the cost to serve, thus being able to improve our margins. So we are working to make sure that our cost to serve improves, and therefore margins improve. Can I add something? In 2018, we're also working to try and increase our customer base, especially in the world of retail, so our retail customers, making sure that we do not get customers that have payment problems. So this should help us improve things overall. Now, if you have some other questions to ask, you may press star followed by 1 on your telephone. Let me remind you, if you wish to ask a question, you can press star followed by 1 on your telephone. Well, ladies and gentlemen, at the moment there are no other questions from the conference call. Well, thank you very much. The Investor Relations Office is always available to answer your questions or answer your possible requests for clarification. Well, thank you very much, and thank you for taking part into this conference call.